from Iron Key Capital. Iron Key Capital is helping investors get diversified, risk-managed exposure to the enterprise adoption of the utility-driven digital assets that combines systematic trading techniques to manage risk with a thesis-driven venture-style research framework focusing on enterprise adoption of utility-driven digital assets. From Sheridan, Wyoming, please welcome Joseph Argiro. Did I say that correctly?
Argiro, but you were close.
Okay, I was close. All right. Thank you so much. You have 7 minutes on the clock, sir.
Great. Let me know. I'm just going to share my screen.
Yep.
Let me know when you can see that.
You are all good. Just go into presentation mode.
Perfect.
There you go.
Hi, everyone. My name is Joseph Argiro. I'm the CEO of Iron Key Capital. And today we're going to be talking about crypto investing or digital asset investing. So a little background on myself. I worked in financial services at Vanguard for a couple of years up until the summer of 2017, when I realized that blockchain was going to revolutionize just about every industry. So that's when I left and joined a crypto startup called ICOalert.com as the second employee. I helped scale that company to 25 plus employees, multi-million in revenue. And the reason why it's important is because I was responsible for aggregating and reporting on 50 to 100 data points on every single blockchain startup that's ever existed, which gives me unique insight into the space. And when the market collapsed, we lost all of our business at ICOalert, and I was forced to move on. So I was hired at Hewlett-Packard Enterprise to lead their enterprise blockchain business strategy for about 3 years, up until about 10 months ago when I started building this business. And through that work is where I developed my investment thesis in enterprise blockchain, which you can read more about on my website. So just a little bit about the market. We're still early. This is a multi-decade trend that's going to play out similar to the internet the first time around. The crypto user adoption is growing at 63% per year, similar to the internet in 1998. And we're on track for 1 billion crypto users by 2030. Every investor benefits from a small net worth allocation to asymmetric assets, especially now after the price drawdown of 70% off of their all-time highs in crypto. And this reduces your overall portfolio risk because of the upside asymmetric potential. And we can talk more about that offline. So the problem in the crypto market, especially for early stage crypto investing, is that crypto investing is risky. We all know this. These are 4 risks that we are on the top of our mind at Iron Key. And I'll just talk about one of them. I'm going to touch on smart contract risk and price risk a little later, but operational security is paramount, right? This is the idea of protecting your keys against hackers, scammers, that type of thing. So what we do is we use this next generation called multi-party computational technology to split up our keys across 3 different counterparties. We have a piece of the key, our bank has the piece of the key, and a fund administrator has a piece of the key, which keeps everyone honest. And there's a lot of different risks here, and I'll just list a couple of them so you can kind of get an understanding of what we're dealing with here. So some of the risks that we're looking at beyond these 4 are systemic risk, unknowable risk, code bugs, user data hacks, looming regulatory risk, global macro risk, death spirals, aggressive market makers, price manipulation. And these are just some of the things that you need to look out for. And for these reasons, we believe that crypto investing is like liquid venture capital and probably makes sense to outsource if you want long-term sustainable returns. So the reasons why we think crypto is liquid venture capital is because prominent assets can and have gone to zero. Terra Luna, top asset, went to zero. Celsius is bankrupt. If crypto investing is liquid venture capital, then you need to stay diversified across asset types and sectors. So that's NFTs, that's crypto assets, that's high cap crypto assets, and emerging crypto assets. You need to invest in the innovation and the established ones. So this is why we do what we do, is because digital asset investing requires the application of public market investing techniques because it's liquid and it trades 24/7. So you need to have a public markets trading strategy. And you need to also understand venture stage tech investing because everything, in our opinion, besides Bitcoin is a venture stage tech investment. So you need to have flexible investment strategies and a strong focus on risk management. So our mission is piggybacking off of our why is that we have a systematic trading technique to manage risk this is systematic profit taking, right? Buy and hold is not the right strategy here. And also, we have a venture stage research framework. So we've looked at all these different metrics, such as daily active users, network adoption, where are these users and what are they doing and why, are kind of the things that we look at on a daily basis. So here's a little bit about our investment strategy. What we offer is diversified exposure to everything besides Bitcoin. So if you look on the right here, you'll see two bubbles. One is staked blue chip assets. These are assets, and what we do is we actively select these assets that are really in the 50 to 500 in terms of market capitalization. These projects have adoption, they have users. We can evaluate them based on fundamentals. That's about half the portfolio. The other half of the portfolio is in what we call venture style liquid token investments. These are things that where we think the market is going, and we'll get there on kind of where I see the market going. But these are, really risky early stage tech investments that we are holding on a 2 to 5 year time horizon. So these are some of the sectors that we get exposure to. Given my background, I tend to lean more towards big data, IoT, AI, and machine learning applications of blockchain technology. And that's kind of where we see the market going over the next couple years. We're not really focused on what you see in the market today in terms of NFT profile pictures or really anything like that. So here is how we compare to other existing solutions in the market. If you look at the Bitwise 10, which is essentially passive exposure to the top 20 crypto assets, and if you look a little deeper, you'll see that there's a lot of dead and it's not getting used. So a passive exposure is really not the way to go. You could go to the other end of the spectrum and invest in a VC, but you're subjecting yourself to a 10-year lockup, which is tough. And usually they focus within one thesis, whereas we're diversified across different sectors and different sub theses within our main thesis. So we're more flexible than a VC. In our early stage venture investing, we can exit positions because we actively monitor these projects. And if we don't like what we don't see progress, developer activity, we can exit these positions at a 2 to 3x profit and no problem, whereas that's just not possible in traditional venture capital. We're also more liquid than a VC. We offer investors quarterly distributions, quarterly withdrawals, redemptions. So we take all the benefits of a venture capital firm and none of the drawbacks. One thing that's very important is regulatory consideration. So we see regulation coming down the pipeline in the next 3 to 9 months in the US. And this is really a one-time opportunity to be on the right side of history. So we take that seriously, and that's the main event-driven catalyst that we're looking at. So this is our team. Matt currently works at Teza Technologies, which is a spinoff of Citadel, which is one of the most prestigious funds in the world. He's currently in stealth because he has a family to feed. And our target is for him to come on full-time January 1st. We've been working together for about 6 months. Matt designed our risk management strategy and is currently working on a systematic quantitative strategy that we plan to deploy on about half the portfolio on the assets that are more actively traded and meet certain volume and liquidity thresholds. And Matt and I are happy to jump on a call with anyone who's interested in learning more about our roadmap and our timeline moving forward. So this is our team. I highly recommend checking out Kevin Cage. He helps craft our investment strategy. Check him out on YouTube and Twitter. And if you do, you'll realize that he's an expert crypto investor and trader and has helped thousands of people become financially independent over the last 5 years. We're also working with various research communities at universities, one being Rutgers, which is the Scarlet DAO. And they're really focused on finding new projects for us to research and also regulatory implications.
Joseph, we have about 5 minutes left for questions. We're into the question time. Just want to let you know.
Got it. Okay. So I'll just jump about a minute left. Yeah. So I'll jump about tractions in return. So just a little comment on skin in the game. So we have 380,000 in founder capital invested. We spent about $50,000 in working capital to get us here. We have 10 investors, about $500,000 raised. Our performance the last 3 months has been good. up 11% compared to Bitcoin, but we're really not, this isn't a get rich quick thing. This is, we're looking for investors who believe in the technology and want to see this through over the next 2 to 5 years and really this next decade. You can read more about our research here, and just a little closing comment on where we're headed, right? So right now, what you see in the news is all about narrative economics driving crypto markets. This is Dogecoin, Elon Musk tweeting about things, profile pictures, NFTs. That's not where the market's going. The market is going towards utility-driven solutions that actually solve real-world problems, whether it be data storage, AI, these types of things. Consumer-focused applications are what's getting attention. We think enterprises and big tech are all starting to figure out, okay, what is my public blockchain strategy and how am I going to integrate this technology? Blockchain-based gaming has shown legs. We've seen that. We think the next generation is big data, IoT, and AI.